So, we've actually been investing as Investcorp in the GCC for almost 2 decades now, right? We started around 2007. And we've seen firsthand how the market has evolved and developed and matured, frankly, over that period. What is happening now over the course of the last few years in particular, but more importantly, looking ahead into the future, is a few forces are all converging together to make the GCC as attractive, if not more attractive, a destination for investment of capital as it has historically been as a provider of capital, right? So what are those forces? Number one, it's the vision of the younger generation of leadership in all the GCC countries that is very focused on economic diversification, right? Driving a diversification of their underlying economies away from over-reliance on fossil fuels into services, into technology, into healthcare, into tourism, logistics, all the things that you would naturally think of. Number two, it's the shaping of the global supply chain, and impacted obviously by geopolitics, the tariffs, the trade flows, and so on. And the GCC sits in a very interesting part of the world where it can actually be a hub for those realigned global supply chains for trade flows. That's two. Number three is the GCC has become a genuine leader in terms of adopting the digital transition that the rest of the world is going to have to go through, in particular, but not solely exclusively focused on AI, right? I was told earlier by someone that in a recent conference of AI specialists from around the world, UAE was rated as the number 4 after US, China, UK, and UAE. So, that kind of tells you something. So clearly there is the development of a thriving business ecosystem now manifesting itself in the GCC, which creates ample opportunity for firms like us, private capital as well as sovereign capital, to invest behind and deliver attractive returns. That in turn is supplemented by their focus on developing infrastructure, which we can get into. Number one, let's start with what we see clearly happening, and not just happening, we are clearly, participating in it alongside others, like us, which is the focus of the GCC government in developing and investing behind 4 pillars of regional infrastructure. Digital, right? Supporting the deployment at scale of artificial intelligence, but also the digital transformation for government as well as corporates. Number 2, the energy transition, which is fundamental to, if you think about the foundation of GCC economies, the energy transition is fundamental to them. Number 3, the transportation and logistics infrastructure, which also becomes the feedstock for the number 4, which is the social infrastructure, right? Education, hospitality, healthcare, other services. So now with those 4 elementary areas of infrastructure being a prime focus for GCC governments, what is necessary to de-risk that journey and that drive is really the right balance of private participation alongside the governments, right? You want the government to be the primary catalyst behind the development of that infrastructure, but you don't want the government to crowd out private sector participation. And that, balance is, on one hand, somewhat tricky to achieve, but on the other hand, it is essential, but also very impactful, because private capital participation will not just maintain discipline around capital allocation, it'll ensure that the broader economy is participating in the development of that infrastructure and the fruits that stem from it. Historically, the local capital markets in the region were simply not large enough or deep enough to absorb all of the surplus capital that was getting generated in the region, which is how Investcorp started. If you recall, in the early 80s, our mission statement was to be a bridge of capital coming out of the region, seeking attractive investment opportunities in the developed world, in those days, North America and Western Europe. Today, we are a truly global platform. We are investing capital all the way from North America into Europe, into the Middle East, into India, into Asia. And we are raising capital from all over the world, including from the Middle East and including elsewhere, to deploy into the Middle East. So it's both ways, right? And that is symptomatic or emblematic of what is happening in the way that the mindset of the GCC investor base has shifted or evolved, rather, right? It's not an or question, it's an and question. GCC investors are very focused on having a sustainable, long-term, attractive risk-return profile in their investment portfolio. Given the nature of the US capital market, not surprisingly, a vast majority of investment flow still goes into the US. We shouldn't be surprised about that, right? That's natural. A significant allocation also is directed towards Europe, but an increasing allocation, albeit from a very small level, is now directed to investment deployment in the region because of A, the opportunity set really becoming deeper and bigger and more attractive, and B, the opportunities to crystallize value also becoming better, right? The IPO markets are vibrant. You're seeing listings happen in Saudi and UAE and other parts of the GCC economy. The local investment opportunities in regional infrastructure are attractive. They are yield generating, they're inflation protected. The currencies are linked to the dollar, so you don't have that currency risk either. All of that is driving increasing interest in local deployment, in addition to the developed markets, and of course the emergence of some very attractive markets in Asia like India, Southeast Asia, Japan, etc. So if I had to kind of peer into my crystal ball, and recognizing that nobody has the perfect crystal ball in the first instance, I would anticipate the GCC market being a very attractive market for long-term infrastructure investment, both for investors as well as for investment managers like us. And when I say like us, I mean managers that have real roots in the region, right? It's hard to replicate 4 decades of knowledge, experience, scars, learnings, but most importantly, relationships that you develop through being here, through that period of time. So, it is a very interesting period for firms like ours, with that history, with that pedigree, with that brand, the trust that we have engendered, to be able to deploy capital at scale that is delivering both return, but also driving and facilitating the economic agenda that the leadership in all of these countries is pursuing in the long run. So, that is something that is very appealing from our perspective. The other thing that will naturally happen as a consequence, right, is that the opportunity set of investing in local businesses will mushroom, right? It'll flourish. Because as economies grow, you need more and more support for businesses to keep pace with the growth of that economy, whether it's for the ultimate consumer or it is B2B. And in both areas, as a provider of capital into sectors that grow at or above the pace of local economic growth, we pride ourselves on our ability and our track record. So that's very exciting and attractive for us.